Hello everyone, good day. This is Rhea Galon. In this video, I'm going to show you the steps of accounting cycle. The first step, identify and analyze the business transaction. So this is what the business transaction looks like. So the business transaction start the process. If there is no business transaction, there would be nothing to keep track on, right? So identify the business transaction and then analyze it. After analyzing it, the second step, record it to the general journal. So the general journal, also called as the book of first entry. So this is an example of the general journal. As you can see, the debit and the credit is equal. An example of debit account, those are the cash, the accounts receivable. An example of credit account, the accounts payable. After recording it to general journal, you're going to post it to the general ledger. So general ledger, also called as the book of final entry. So the journal entries are then be posted to the general ledger, where a summary of all transactions to individual can be seen. And after posting it to the general ledger, you're going to make an adjusted trial balance, in which you're going to test the equality of credit and the debit balances. So add all the credit accounts, add all the debit accounts, and then debit and the credit must be equal. So this is an example of adjusted trial balance. Next, after adjusting the trial balance, the fifth step is adjusting entries. So if there is an entry so you're going to adjust, then adjust it. So if the entries is being adjusted, of course, the trial balance as well. So the sixth step is adjusting trial balance. So before proceeding to financial statement, you're going to adjust the trial balance first. So next, the preparing the financial statement, the seventh step. So the financial statement is made up of income statement, changes in equity, the financial position or the balance sheet, and the cash flow. So this is what an income statement look like. So as you can see, you can track your income in here. Next, the changes in equity, your capital. Next, the cash flow. The financial position or the balance sheet, in which the asset is equal to liability plus equity. Next, the cash flow. All your cash accounts can be seen in here. So those are the financial statements. So after preparing the financial statement, you're going to close the entry. So all the nominal accounts is being closed, or all the temporary accounts is being closed. The real or the permanent accounts cannot be closed. Only the temporary accounts. So closing entries is the 8th step. So after closing entries, you're going to close the trial balance as well. So the 9th step is post-closing trial balance. In the accounting cycle, the last step is to prepare a post-closing trial balance. It is where to test the equity of the credit and the debit entries or the transaction. Since the temporary accounts are closed, at this point, the post-closing trial balance contains real accounts only. So in closing entries, only the nominal accounts or the temporary accounts, while in post-closing trial balance, all the you're going to close all the permanent account. So the 10th step or the last step, which is optional, is reversing entries. It depends on you if you're going to reverse your entry. So that could be all. I hope you understand my demonstration. I hope you like it, and that could be all. Thank you and goodbye.